job of Parliament to deliver on the promises made at the last election, not to be seeking a new one.
The ayes to the right, 202. The noes to the left, 432. So the noes have it. The noes have it. Unlock!
Well, the noes have it. It was not entirely unexpected, but the magnitude of the dissent was staggering. The UK Parliament rejected the Brexit vote last night by a landslide. Good morning and welcome to All You Need to Know. I'm Alex Matthew. Here are the headlines this morning. Theresa May's Brexit deal is all but dead in the water after a landslide defeat in the UK Parliament. The embattled Prime Minister will now face a vote of no confidence later today. Asian markets are taking a breather today. Japanese markets are trading with losses, while those in South Korea trade little changed. Lenders to beleaguered Jet Airways, led by State Bank of India, will meet today to discuss the resolution plan prepared to salvage the crisis-laden airline. And strength in the dollar and rising crude oil prices have led the rupee to a one-month low on Tuesday. The currency ended at 71.02 against the dollar. But what may add the currency, though, is encouraging data from the trade deficit. The gap between India's exports and imports fell to a 10-month low at $13.08 billion in December. Now, UK Prime Minister Theresa May's Brexit deal was rejected by the Parliament in a landslide vote. The House of Commons voted 432 against 202 against the separation deal that was brokered with the European Union. Here's what she said after that huge defeat.
It is clear that the House does not support this deal, but tonight's vote tells us nothing about what it does support. Nothing about how or even if it intends to honour the decision the British people took in a referendum Parliament decided to hold. And people, particularly EU citizens who've made their home here, and UK citizens living in the EU, deserve clarity on these questions as soon as possible.
And that exactly is the question. What is likely to happen from here on out? What eventually happens when that March deadline comes about? We're joined now live by Jody Schneider of Bloomberg News, who hopefully will give us a little more clarity this morning. Good morning, Jody. What do we look forward to?
Good morning. Well, the path forward is the real question now. Clearly, it was a humiliating defeat for Theresa May, and the divorce agreement from the EU appears to be dead. This agreement can't get through Parliament clearly, and even small tweaks would be unlikely to go forward. So the question is, what's next? There's a lot of talk about trying to delay, buying some more time. It's only 10 weeks until that March 29th divorce date. There's going to be a no confidence vote in Theresa May in the next day. She may survive that, but then what happens then? There's talk about another referendum. But clearly, in the short run, businesses want some clarity, and the thinking is to try to get some kind of delay so that that something else could occur, some other kind of agreement or some other kind of arrangement, because leaving in a no-deal Brexit, everyone agrees, would not be a good situation, particularly for the UK economy.
Thanks so much for that, Jody. Well, let's talk about the U.S. Stock market now. The U.S. stock market, most stocks rather, snapped a two-day losing streak on Tuesday. News of a fresh round of stimulus in China have also helped to calm fears about the impact of slower Chinese growth on the global economy. Sue Keenan of Bloomberg News wraps up the complete trading session on Wall Street in this report.
Tech stocks helped fuel the latest rally on Wall Street with an assist from China. News of a stimulus plan in China helped alleviate concerns about global growth. And we saw the S&P 500 break above the 2,600 level. It's important to note, a lot of chart watchers say that 3 times last week the S&P tried and failed, but it managed to tiptoe across the line in this latest session. The Nasdaq 100 recouped all of its losses in the last two sessions. This is a tech-heavy index reflecting the gains. Netflix, meanwhile, lifted the FANG cohort. It rose as much as 7% as the global video streaming service announced it was going to boost pricing. In fact, most of the FANG stocks, Apple, Facebook, Google, Amazon, were up 2% or much better. Financial stocks, meanwhile, rose for an 8th straight session. This is a week where a lot of bank earnings are driving the trade. JP Morgan's latest earnings showed equity trading revenue gains, while the bank's fixed income unit saw a dramatic decline in revenue. Wells Fargo was the exception in the rally in banks. It did not have the turnaround quarter it expected. It actually reported an annual decline, while peers have all been reporting increases. And in oil, we saw New York traded West Texas Intermediate rise above 52. Looked like there was a pause in the rally, but an anticipated drop in the weekly data for U.S. oil stockpiles caused oil to rise yet again. In New York, I'm Sue Keenan, Bloomberg News.
All right, well, that's the update from the U.S. markets. But in Asia this morning, just about half an hour back when I looked at it, three early risers, that's the Kospi in South Korea, the Australian benchmark and the Japanese index. There were two of these indices that were trading in the green, moderately so, but there were two. And the Nikkei in Japan was trading weak. It continues to do so. It now is losing ground of about 1% in trade. But the Kospi, which was trading positive, has now moved the other way, along with a lot of the other markets that have just about opened up, and that includes the Chinese benchmarks that have just about opened up for trade over the last 5 minutes. One other weak spot is the Hang Seng, which is about 0.8% lower as of now. Of course, the dust could settle over the next half an hour or so, but it seems to be that it's a bit of a weak start for Asia, not tremendously so, a few cuts here and there, but it seems like it's going to be a weak session for the Asian markets. Let's turn now to Agam Vakil, who's joining us to tell you all about the trade setup for the day and also what's happening in the futures and options space in India. Good morning, Agam. How's it looking for us?
Well, good morning, Alex. All eyes will be on 10,900 on the Nifty. For now, it's holding on as far as the SGX Nifty is concerned, because that's actually looking at a marginal declines for considering a 20-point decline. But when it comes to markets yesterday and how things panned out, well, we did see a lot of strength coming in the benchmarks, where up more around 1.4% for the benchmarks, with the Nifty small cap, the mid cap indices advancing as well, but well underperforming. And the Nifty, banking indices also doing quite well, but in Wipro and Vedanta, in the ADRs did come off to quite an extent. We had some weakness in ICICI Bank and HDFC Bank as well. And moving on to the next set of ADRs, well, we have gainers in Dr. Reddy's, Infosys, and ICICI Bank. Let's take a look at some of your, the way FIs have panned out, and we've seen about 160 crores odd of net buying coming along. We have buying from DIIs as well. So for a change, we have buying from both of these corners. And in terms of contribution, a lot of gains coming in on the back of Reliance Industries, TCS, and Infosys, something that has actually pushed the indices higher, and not too much to speak for actually when it comes to the losers. Coming down to your futures and options space, what we're keeping an eye on is a 3% increase in open interest towards fresh longs, and the Nifty banking futures have also seen fresh longs, but here the open interest has increased by as much as 2.2%. Your open interest has changed, where we see more writing around the 10,800, 900 puts and unwinding in the 11,000 call. And in open interest distribution, your range remains the same, but we've seen more writing around the 10,700 call as well. And moving on to your two stocks which are still in the F&O band, Adani Power and Jet Airways. Your India volatility index has come off back below the mark of 16 at around 15.6. Your Nifty put call ratio has edged higher to around 1.5. Your Nifty bank put call ratio at around 1. And in terms of other variables, we're keeping an eye on something like a DCB Bank, which has seen about 21% rise in open interest. Godfrey Phillips has made a substantial up move. And in terms of stocks which are seeing unwinding in open interest, we have the stocks such as Strice Shasun, short or rather longs and winding coming through after a lot of strength. Pidilite is seeing short covering, and it's the same for HDFC and TCS. So watch out for these counters. Again, Alex, it was a very mixed day of trade, but we're going to wait and watch as to how the benchmark indices react to global, news.
Yeah. All right. Absolutely. Thanks so much for that, Agam. Over the last few sessions, 3 sessions, in fact, to be very clear. The rupee has lost a lot of ground, about 44 paise against the US dollar. Let's get you an update on the currency as well. The rupee weakened to a one-month low on Tuesday, led by a strong dollar and rising crude oil prices. This was the third straight session, as I mentioned, of losses for the currency that has now weakened 64 paise over the last 3 sessions. The fall was restricted due to fresh foreign inflows and a robust session in the domestic equity markets. However, what may aid sentiment today is encouraging data from India's trade deficit. The gap between the country's exports and imports stood at a 10-month low of $13.08 billion, and this was largely led by falling oil prices and a 2.5% drop in imports. The marginal rise in exports was led by petroleum products and chemicals. Let's shift focus to commodities now, and that has obviously been a big talking point over the last few weeks and months. Yash Upadhyay is here to tell you all the updates this morning, though. Good morning, Yash. What do you have for us?
Morning, Alex. I'll start with crude oil prices, and they have snapped their two-day losing streak, with Brent rallying almost 3% on Tuesday as investors anticipated a decline in U.S. crude inventories, and China signaling more stimulus measures in order to offset some of the impact from its trade war with the United States. Most base metal names, they ended the day higher on Tuesday, with nickel rallying nearly 2.5%, extending this month's gain to almost 9.2%, the highest amongst all of the other base metals, on optimism that additional demand from electric vehicles may deepen supply shortages. Tin climbed as much as 1%, extending its run of rally to a 7th straight day. It's the longest winning streak, by the way, since 2016. Aluminum was also up about close to 1%, and copper was up close to 0.4% as well. On the other hand, gold prices erased all of their day's gain to end the day lower by about 0.2% as the greenback strengthened, as well as U.S. equities climbing on Tuesday as well.
All right, thanks so much for that, Yash. Let's now have a look at what's making headlines across the globe. Sue Keenan is back of Bloomberg News, obviously, and she's bringing you the first word headlines.
Jamie Dimon warning that the recent government shutdown here in the U.S. could drive U.S. growth to zero. He told the FT that companies are increasingly worried about the funding dispute in Washington as arguments over President Trump's border wall keep federal agencies closed. Administration economists now say the shutdown will shave more than 0.1% off growth every week. ECB President Mario Draghi, meanwhile, says the Eurozone economy is weaker than expected, hurt by rising geopolitical uncertainty. Warning against complacency, he says significant stimulus is still needed to help the drive towards stable inflation, and the bank's rate policy continues to provide support. Draghi added that the ECB possesses the necessary tools to maintain the Eurozone economy. Consumer confidence in Australia slumped the most in more than 3 years. This was amid pessimism over property prices and the wider economy. The Westpac Melbourne Institute Consumer Sentiment Index for January fell 4.7% from the previous month. That is the biggest drop since September 2015. Falls were seen across all sectors, with the largest drop in the perception of economic conditions for the next 12 months. New Zealanders, meanwhile, spending on credit and debit cards plunged the most on record last month, adding to signs that economic growth is slowing. Card spending fell 2.3% from November, and that is the biggest monthly decline since they began keeping statistics back in 2002. And it's far more than the decline of 0.4% that economists were expecting. The RBNZ was hoping for a lift in activity in the last 3 months of 2018. Didn't happen. Global news 24 hours a day, on air and at TikTok, on Twitter, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Sue Keenan. This is Bloomberg.
India has decided not to allow its private refiners, like those of Reliance Industries and Nayara Energy, to share the limited quantity of Iranian crude it is getting under the U.S. waiver from its sanctions. That's because the Indian government feels the private refiners like Reliance and Nayara are much more agile in sourcing of crude and then there is no scarcity of crude supply in the market. So the private refiners can very well source their crude anywhere else other than Iran, and India government wants to protect the limited supply of Iranian crude only for its public sector refineries like Indian Oil, HPCL, BPCL, and MRPL. This is because Iran is a very lucrative supplier. Its oil is much cheaper, and also there are other advantages of higher credit period and along with free shipping. So this benefit, I think the Indian government wants to retain for its own refineries and let the private refiners source from anywhere other than Iran.
The GST Council has notified formation of a ministerial panel to aid the residential segment of the real estate sector. The ministerial panel will be headed by Gujarat Deputy Chief Minister Mr. Nitin Patel, and the panel will examine whether a composition scheme needs to be introduced for the sector. Other terms of reference of the panel include analyzing the GST rate for the sector, examining whether a composition scheme or a similar scheme can be introduced for the sector, and the transition to the scheme, and also the issues that the sector is currently facing. The panel will also look into the legality of inclusion or exclusion of land under the composition scheme, since purchase or sale of land currently does not attract goods and services tax.
Well, bunch of news that you're tracking this morning. First off, I'm going to start off with Zee Entertainment numbers, where the revenues have shot up by 18% and net profit of the company has risen as much as more than 50%. EBITDA growth has too inched up by 27%. MCX, on the face of it, looks like good set of numbers. Revenue up by 22% and EBITDA has risen by 35% for the company, on account of which the profitability has grown by more than two-folds, mainly on account of the sharp uptick that we've seen in other income, which has risen by more than 2.5 folds to a number of around 32 crore as compared to 13 crore. Specialty restaurants, where the revenue for the company has risen by 24% year-on-year basis for the December ended quarter, and net profitability of the company has come in at 8 crore as compared to less than a crore figure that we've seen in the corresponding quarter, mainly on account of healthy operational performance coming in from the company. Then Networks, well, not a good set of numbers coming in from the company. Top line growth, we're looking at a downtick of more than 6%. Bottom line, we're seeing a loss which is widened to 33 crore as compared to 3 crore, and EBITDA for the company which has declined more than 39%. KPIT Technology, yet again a weak set of numbers reported by the company. Revenue has seen a downtick of more than 6%. Bottom line has seen a downtick of more than 20%, and EBIT for the company has also slipped by more than 29%. Separately, in the news development that we have for this counter, we have the company which has received NCLT nod for KPIT and bill us of restructuring, which will in short create two public companies by March 2019. Also, we are looking at Indoco Remedies, which has got an initial, which is right now in initial discussion stage to sell part of the local business for a sum of around 600 crore. Now, this is the ET report that we're talking about, and investors could include the like of Zydus, Lupin, and PE funds.
All right. Well, thanks so much for that, Nikki. Let's talk about some of the stories that you'll find if you look up the website, bloombergquint.com. Of course, you'll find all the updates over the course of the day on all the live markets, but check out these stories. In what may be a last-ditch effort to save the struggling Jet Airways, lenders of the airline, led by State Bank of India, will meet today to discuss a resolution plan. Removal of Naresh Goyal from the board of the airline will also be part of the discussion. India's second largest air carrier, remember, owes close to 8,000 crore rupees to bankers and defaulted on payments last month. Now, the government on Tuesday allocated 6,084 crore rupees to its flagship rural employment scheme, days after it was reported that nearly all its funds allocation was spent 3 months before the end of the current fiscal. The latest inflow of funds, which are in the revised estimate stage, take the Mahatma Gandhi National Rural Employment Guarantee Act's allocation to a record high of 61,084 crore for the financial year 2018-19. The Ministry of Water Resources, River Development and Ganga Rejuvenation has said this in a release. that's all we have for you in this edition of All You Need to Know. There's a lot more coming up, starting with, Indian Open at 8 o'clock. So do stay tuned. This is Bloomberg Quint.